Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation. Now, today I'm going to talk to you about what I feel is the perfect tool for breakout traders. Let's take a look at this example right here, this older example in DSEY. Let's say you were watching this and you were interested in purchasing this. You'd done the research, you liked the company, you were interested in it, but you wanted to wait for some type of confirmation in the form of a breakout, because it's kind of in a range and you don't want to get involved in buying something if it stays in a range for weeks or even months. So you're waiting for a breakout. And then this happens. Later on that month, it comes out that it's to be acquired for 4.6 billion. And the shares are trading up 38.5% higher in pre-market activity. So you kick yourself, you say, why didn't I just buy it? The news is here and look where it's opening. So I missed it entirely, waiting for that breakout. Well, today I'm going to talk to you about what I feel is the perfect tool for breakout traders, because it can oftentimes signal just before a breakout is about to take place. For example, in this chart right here, a breakout signal would have been generated days in advance of that news coming out. So you could have taken advantage of that and been involved well before the announcement was made. And everything you're seeing today is the perfect tool for breakout traders, is generated and auto-displayed on our platform, the PTS Primo charting platform, that actually makes breakout trading simple, because with one click, you'll see where to purchase or sell for these particular breakouts. So this is going to be a great educational presentation today. Thanks for joining us. My name is Steven Primo. I'm the president and founder of Specialist Trading. And it's kind of interesting the way we developed this tool. I developed this with proprietary strategies, but with a totally different motivation before we looked at it and saw that it could also be used for a breakout tool. So we kind of just stumbled onto this really tremendous advantage to having this. And I'm going to be sharing with you some really interesting examples and show you how simple it is to apply on our platform. This is going to be a great educational presentation, but before we begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this breakout tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, I see a lot of new names here in our class today. So if you haven't done so already, please feel free to follow us on Twitter. I would suggest copying down our handle right there at SPCLSTTRADG. Every day I post different snapshots of strategies or methods that have generated signals. And I also give a little bit of explanation as to why they did that. Also post different bits of financial wisdom. So there's lots of free education on a daily basis. So please feel free to follow us on Twitter. Now, as I've stated numerous times, we are a little bit different from other presentations and webinars you may have attended, in that we are first and foremost an educational company. That means our goal is the opposite of a lot of other webinars you may have attended, or a lot of other companies out there. What they're trying to do is basically sell you something, and they just basically force feed you signals, tell you what to buy, what to sell on a nightly basis. And in our opinion, that's really not a good educator. That's not what a good mentor does. My goal is the opposite. It's simply to teach you how to trade so that you can make your own decisions. I've been trading now for 46 years. I started my career on the floor of the stock exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, I made markets in roughly about 50 stocks. I traded through the crash of 87 and in the bull market that followed. So I've seen and traded just about everything. And here's one thing I've learned in my 46 years of trading. The only traders that are still around, that are still consistent and have sustained themselves, are the ones that make their own trading decisions. None of these traders who I first started out with go to chat rooms to find out what the other person likes or what the other person doesn't like. They don't read blogs to find out what to buy or sell. They don't listen to economic news or earnings reports or things of that nature. They have a plan that works, that's extremely simple, and they just stick with it. These are the only traders I know that are still trading. The ones that followed some trading guru or had some master system that never failed have pretty much lost it all, and they're in a different business entirely. So my goal is to sustain you so that you can be trading maybe 2, 3, 4 good decades, not just 2, 3, 4 good weeks and then give it all back, okay? So I want to teach you the same way I was taught, and that's called the specialist edge, okay? So that's what I'm going to be digging into a little bit in today's presentation. Now, just a few announcements before we begin. Yes, this is being recorded, so if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will get a link to this recording at the end of the presentation. But also, please, if you have any questions, please wait till the end of class to ask them. I promise I'll get to all the questions, but we'll flow a lot quicker and won't waste all your time here in the morning, taking up all your trading day with questions. So please wait till the end and I'll get to the questions then, okay? With that stated, let us begin today's educational presentation. And what we're going to be talking about today is a great tool, probably in my opinion, one of the most overlooked tools we have at specialist trading, and that's our dynamic stop levels. Now, as I said, we created this tool, Pro Trader Strategies and myself, and we developed it with an entirely different motivation behind it. And then we kind of stumbled on to what I'm going to be talking about today. But originally, this is a proprietary stop placement formula that moves with the ebb and flow of price and specifically designed to track the behavior of the market you are currently trading. So dynamic stops can keep you in a winning trade as long as possible. This was our main motivation for developing this, because we have a lot of traders, a lot of students around the world who said, Steve, I love the methods, I'm really doing well, but I kind of get out a little bit too early. I'd like something that would keep me in a trade a little bit longer so I can squeeze out as much gains as possible, potentially making a lot more. So we developed this with that goal in mind. For example, here's a weekly chart, a older chart of Oracle, all right? Now, this is an actual signal, one of our strategies generated to go long. But here's how you would apply the dynamic stops on our platform. This is the PTS Primo charting platform. And we made it simple. Once again, in the upper left-hand corner, you would simply click on the dynamic stop tab. And in the drop-down menu, you'll see, click on stops, and they automatically appear. So if you had bought or were thinking about buying based off this signal here, you would know that these were the last 2 stop levels. You could take your pick of which one you wanted to choose to place your stop. Now, as the trade unfolded, you see that it's actually going in your favor. Now, here's where a lot of students had trouble. They would say, okay, I'm going to exit this. I'll exit somewhere here with a nice profit, and I feel really good about it. But what if it goes higher? And then I feel like I gave a lot of it away. Well, here's where the stops really come in handy, because the stops would still have you in the trade, and then they would have generated one right here at the close of this day. So you would have moved your stop up to this level, and look what happened. The next 3 days, you didn't get stopped out, went a little higher, and it generated another stop. So you move this stop up to here, and you're still in the trade, and then you're capturing more and more gains as the stops are increased and going in a higher level, and you're still holding on to your position. Whereas before, you may have exited somewhere around here and said, gosh, I gave everything away. That's the beauty of the dynamic stops. Although they do not do it 100% of the time, if you really have one of these trades that just keeps on going, either straight up or straight down, it will keep you in there a lot longer than a regular trade. Here's another example, because you can use this in the opposite direction, going short. Here's an example of the British pound Canadian dollar, because it works in any market, any time frame. This was a sell signal generated by one of our strategies. And had you decided to take this or were thinking about taking it, well, you click on dynamic stops and click on buy stops, because you would be buying back if you were wrong. And this is where you place your stop. Okay. So if you decide to take the trade, you're short or you sold them, and nothing much happens, but then another stop level is generated. So now you'd move this down to here. And so you've really decreased your risk with each preceding bar. Now the trade starts to go in your favor, not a lot, but look what happened. We now move the stops even lower until you've got a really nice profit. Here's where most students will say, hey, well, this is a bottoming pattern here. This looks like a morning star pattern. I better cover my short and get out. But the dynamic stop said, well, why don't you just wait and see if it trades here? And then look what happened. Went even lower. So they're really designed to keep you in a trade as long as possible, whether you're going up or straight down. That's the great advantage to the dynamic stop levels. But there are other advantages to trading with the new dynamic stop levels. We kind of stumbled upon this while we were doing the research, and this is what we're going to be talking about today. We're going to be talking about dynamic stop breakout entries. And we're going to show you a lot of examples, And specifically, we're going to be focusing mainly on inexpensive stocks, because those are the ones where you can really take advantage of a lot of breakouts. Many times with the expensive $70, $80, $100, $150 stocks, they're a little bit too expensive for people to get involved in. And also, they're more trendy than looking for breakouts. But you see these very inexpensive $1 to $5 stocks that may be going sideways for a long period of time, and you're waiting for them to break out based on some news or some announcement. Well, this is where the dynamic stop breakout entries can really help you. Okay, so just for educational purposes, here's a little bit more expensive stock, a $20 stock, but I want to show you the process of how you would apply this, okay? The first thing you want to do is look for some type of steep downward momentum, because after all, we're buying and we want to buy on a breakout to the upside. So we want to see some type of steep downward move, okay? It doesn't have to be real steep, but the steeper the better, all right? We want to be headed lower. Now, click on PTS Dynamic Stop. In the drop-down menu, click on Buy Stop, because after all, we're looking to buy, right? We're not looking to sell here. And they will automatically appear as the trade unfolds and goes in your direction. These will appear. But remember, where before we were using them as stops to get us out of a trade, here we're only looking to initiate our entry into a trade. So we're not long this at all, and we're looking to get in at the lowest price possible. So as the stops keep being generated and displayed, we're still waiting for price to touch this level, and the numbers are automatically displayed on the platform, so we know exactly where to get in. So you can place a limit there, some type of a stop limit, or if you see a trade there, you can click the market and go and buy right at the market. Let's look what happened on the next bar. We actually traded there and we closed above. Now, remember, you can wait for it to close above, but all you really need to initiate a trade is for it to trade at the stop level. So at 22.32, you would have purchased. And so now you're in the trade. You've got a one-day little profit. That's not bad, but remember, we're going for something a little bit more substantial. And we have to protect ourselves. So where are we going to place our stop? Because this is nothing in trading is 100% guaranteed. It may not work out after all. So we want to go back in time, go backwards from where we bought it, go back and see where the lowest low was, and that was right here. So we're going to place our stop just below this bar. So if we bought here, and if the trade goes against us, we will exit somewhere down here. And this is our risk, okay? If this meets our risk parameters, well, then we stay in the trade. And look what happened. That was a 48% price gain in just 2 weeks. Now, obviously, something came out, something happened in the market, something economically. We don't care. All we care about is the ebb and flow of the market. Remember, the dynamic stop levels are based off market behavior. They're not based off fundamental news. They're not based off economic reports. They're simply based on what the price is telling you, what it wants to do. And in my 46 years of trading, I have had more consistency basing my trades only off what the market is telling me, as opposed to overcomplicating things and worrying about interest rates, worrying about earnings, worrying about what's going on economically. All I have to do is look at price, and it's so much easier. And on top of that, it's already pre-formatted and auto-displayed on the PTS Primo charting platform. Okay, so that's the process. Let's look at some more examples. We've kind of jumped up there. Let's look at some more examples. Remember, we're going to emphasize inexpensive stocks because this is where you really see the advantage to using these. Okay, so we have a chart here at RLX, and we see that the slope is going downward. That's what we need, all right? So let's apply the PTS dynamic stop levels, and we see how they appear. So far, they have not been violated or touched. So we can just go down here and buy. As it keeps going lower, look to buy at lower prices. At this point, it trades at that price at 2.38, so that's where you would have bought it. And you go backwards now. So where's the lowest low? It's right here, okay? So you would have bought it here, and if it all of a sudden reversed and went straight down, you would be stopped out here. So let's see how the trade unfolded. Well, in just 2 more days, the price gained 22%. A total of 3 days you were in the trade. Okay, you may say to yourself, well, it doesn't really look like a big move, but remember, that's 22%. Think if you were long Tesla and it went up 22%, or you were long Amazon and went up to 22% price gain in 3 days. So everything's relative. And remember, this is a $2 stock. You could literally buy thousands of shares if you'd like. Let's look at this example in LFST. We've got a nice downward slope. So we apply the stop levels here, and we see that, okay, they have not been violated yet, and they keep going lower. As we go into the future, we see, well, it looks like we just traded there, so we would be long. Remember, you don't have to wait for it to close there or close above. All it needs to do is trade at that price, which is 5.22. Now we go back a couple of bars. This was the lowest low of all the last 20 or so bars. So that's where we're going to place our stop. And we're in the trade. Let's see what happens. Well, a 40% price gain in 3 weeks. Not a bad little trade, right? Gained 40% of its price. It increased 40% in just 3 weeks. Let's look at DSEY. We were talking about that earlier. So we have a downward slope. We apply the stop levels, and we see they have not been violated yet. Here's our last one at 5.87. Right here it touched, and right here it went up significantly, about a point, and then came all the way back down. That's okay. You're still in the trade because this is where you'd be stopped out. It's still okay to be in the trade. Nothing much happened for the next week, but then that news came out, remember? Isn't it funny how this signaled a buy a full week in advance of the buyout news? And when the news came out, it's too late. You would have not have wanted to buy it way up here, right? But look at, you had all this in advance, a full week in advance. You were able to buy, if you wanted, thousands of shares before the buyout rumors came out, and the stock gained 38% in just a couple of weeks, okay? Here's an example in LAZR, laser. Okay, we applied the stop levels. We would have entered here at 6.78. Here's our stop just below that lowest low, and a 55% price gain in just 1 week. All right, once again, think of if you owned Google and it gained 55% in 1 week, or if you owned Apple and the stock price went up 55% in 1 week, you'd be so happy knowing that you had a really nice trade there. It's all relative, and plus, with inexpensive stocks, you can buy a lot more shares. All right, here's an example in GME. All right, this is going back a little bit, but you see how we applied the stop levels, how they keep going down all the way. Nothing has been violated until we get to this point right here at 16.77, I believe. So we find the lowest low, which is right here. So if the trade does not work out, we're going to be stopped out right here. And as we can see, price jumped 60% in just 2 days. Now, I want you to look at this weekly chart. All right, this is a weekly chart in GPS, because you can apply this to any time frame as well. It doesn't matter if it's an hourly time frame. It doesn't matter if it's a weekly time frame. Okay, we have a strong downward slope in GPS. The stop levels are applied, and right here at this week we crossed above at roughly $9, and we're long, and we place our stop right here. Okay, so now we're in the trade. We wait to see, and it goes up for a little bit, but then quickly comes all the way back down. Are we stopped out yet? Well, not really, because here's where our stop is. Now, you can always exit. You could have exited here when it was trading around 12 or so, and that's a nice little gain here, 30% gain. But let's say you were going for the long haul, your research, your analysis thought it was going to go much, much higher. So you're still in this trade. That was a good decision to hold on, because in 3 months, price gained 70% of its value, okay? So remember, weekly charts, it's all relative, as opposed to daily or half-hour charts. It makes no difference. You can still apply this as long as the parameters are in place. Let's look at this example in PALI. All right, this is an inexpensive $2 stock. Now, this is where we talk about consistency. Now, I know a lot of you, I always say this in my webinars, a lot of you always get back to me and they say, well, Steve, I've had a couple of losers. I thought you said this was consistent. Yes, consistency is an awareness of losses, but a consistent method is one that's able to recoup those losses. The sooner, the better. For example, how many of you ever trade a method or a technique where you have a couple of losses, which turns into maybe 5 or 10 losses, which turns into 20 losses in a row? That's not a consistent method where you continue to lose after trade, after trade, after trade. What you want is a trade that is aware that you will have a loss here or there, but you feel confident in taking the next setup because you know you'll be able to make it back. That's what we want to have in a method. That's what sustains you. That's what gives you longevity. So we're looking for a 2-step forward, 1-step back process. Every trade will never be always continually a winner. If somebody promises you that, you should run or look the other way, because I've been trading 46 years. I've never known anyone that has never had a losing trade. Everyone loses for the best traders. It's just the consistency that's able to sustain them. For example, right here, we have a very inexpensive $2 stock in PALI, all right? We got long right here using the dynamic stop levels. We placed our stop right here, and look what happened. In the next week, we're stopped out. We lost 16 cents. Now, remember, I know it's all relative as to how many shares you have, but that's not a lot, 16 cents, okay, in the scheme of things. Now, here's what happens, though, to a lot of students who have applied this over the years. They'll say to themselves, well, you know, I got a loss there, so I'm going to look for a setup somewhere else. Well, oftentimes that is not the best thing to do, because if this is being stopped out, many times it will continue to go lower, as we do right here. And so what do we have? We have a continued downward slope. So this may still be a good candidate for a breakout, provided that we continue to track it. So it's your choice, but if we apply the dynamic stops again, we see that we have more and more that are trailing all the way down. Now we can buy it at a lower level, 1.83, and look what happened. We gapped up a little bit above that, but we got back in. We use the same parameters. We place our stop just below the lowest low. And now with this trade, we were potentially able to make $1.70 in just 2 days. And remember, we would have lost 16 cents in the previous trade. So we would have been able to more than make up that loss and potentially make a little bit more, because we had a 90% price gain in just 2 days. So this is a perfect example of what we mean by when we say a consistent method. Here's another example in KC. Same thing. We're using the process, tracking the trade down a downward slope, and finally we get long right here, 4.38. We go back in time to find the lowest low right here, so we place our stop, and then, oops, let me just see, I gave it a little bit, went backwards there. There we go. We place our stop just right here, and there we got stopped out about a week later. Okay, so we lost 65 cents. Now, depending on how many shares you have, you know, it's all relative as to how much you would have lost. But let's see what happened going forward. We're out of the trade now, and going forward, we could have still applied this, because look what happened. We could have re-entered again, gotten long, placed our stop just about the same place, and taken advantage of 110% price gain in 2 weeks. So we could have easily made back that 65-cent loss, provided we had the same amount of shares, because we could have potentially made over 4.5 or close to 5 points. So this is another perfect example of what we mean by consistency, and especially because these are such inexpensive stocks to begin with. So let's go over the process, okay? Here we have NAAS. All right, kind of going lower to sideways. We have a downward slope, not real steep, but it's okay. It fits the mold. So we apply the dynamic stops in our upper left-hand corner here. In the drop-down menu, we'll click on Buy Stop, because remember, we're looking to buy. We don't want to short inexpensive stocks. We only want to go long them for the breakout. And we see the dynamic stop levels are automatically generated. So we're not in the trade yet. We see this posted at 4.54. So this will be our entry point if we want to get into this trade. Let's see what happened. Well, the very next day here, it did trade. We would have gone long and placed our stop just below that lowest level right there. Okay. And in the next 5 days, there was 150% price gain. Think of that. Nothing was based off news. Nothing was based off anything economically or what's going on in the inner workings of the company, any announcements. It was solely based on market behavior. It is so much easier. It's so much simpler way to trade when you base your trades and setups off market behavior than to have this convoluted logic. Well, if these earnings are met, then that's good. But if it's at this point, it's bad. But then again, he said this in that blog, so that's bad. But then again, the interest rates mean that that's actually good. I did all that 46 years ago when I was on the floor. I used to wait for the earnings, and I have all these estimates because I tracked roughly about 50 stocks. And it was the most confusing thing ever. I would see fantastic estimates come out, much better than the estimate, and the stock would go straight down. Then I'd see the opposite, terrible estimates. The stock would gap down and go straight up on the day. It's just too difficult to figure out. It's too subjective. But when you base your decisions off of market behavior, it's much more cut and dry. We know exactly where we're buying. We know exactly where we're exiting the trade if we're wrong with our stop. That's how simple trading can be when you learn to cast away all the nonsense and what my traders called noise, these traders who taught me, my mentors, and just learn to basically listen to the chart in front of you. Okay, let's review about what we talked about today before I tell you about a great offer we have for all of you. The dynamic stops, these are specifically, as a stop price, specifically designed, and it's based upon market behavior, as I just said. Now, as we look here, its main job was basically to keep you in a trade as long as possible, once again. But there are other advantages of trading with the new dynamic stop levels. This is what we went over. This is what we stumbled upon during our research. So this is really, in my opinion, the perfect tool for breakout traders. We have a number of stocks that are always following trend, that are always following some type of movement in the market, but this is one that we really focus on breaking out. And this is, in my opinion, the perfect tool for any of you that are breakout traders. All right, for attending today and listening to this presentation, we have a great offer. Now we're going to offer you our dynamic stop two-part course. This is there's so much information jam-packed in this. This is actually a two-part online course. You'll get the full video and you'll get the stops based on market behavior, not randomly. You can apply to any strategy, any market, or any time frame. On top of that, we're also going to include 3 proprietary trading techniques, similar to what I just taught you today. Now, here's the only difference. You see that little asterisk. These are advanced trading techniques. So the PET D is required. That's another tool we have. I didn't go into today because it's a little bit more advanced, but it's probably the best tool and one of our most popular tools for identifying the short-term trend. So when you can use this accompanied with the dynamic stops, we really have some really advanced ways to trade with them, okay? Once again, you can apply to your current strategy or build your own based off this. And remember, all of these stop levels are auto-generated, but they're only auto-generated on our platform, the PTS Primo charting platform. So because of that, we're including a full year free of the platform. So this price is included with the platform. That's a close to a $2,000 value. We're only charging you for the dynamic stop two-part course. Now, I know a lot of you may say, well, you know, I kind of have the idea. I'll just kind of follow it and be able to, you know, see when something has gone down long enough and figure out my own stops. That's not enough. We tried to do that even ourselves, thinking we could make it simpler without having to apply the dynamic stop levels, and it just doesn't work as well. Watch the process here in IFRX. Remember, we want to see that downward slope, okay? But it won't work until we apply the dynamic stops. And I know a lot of you say, well, the dynamic stops, they're just short-term tops, so that's all I need to look at. Well, not really, because if you follow this last dynamic stop, this is not a short-term top right here at 1.88. Sure, you could say this was a short-term top and maybe this one was, but this one wasn't. It wasn't a pivot high. So there's no way you would have known that this was a dynamic stop at 1.88. Now, as it traded there, that's where you would have entered. You would have placed your stop just below this level. And in 2 weeks, price skyrocketed 200% just based off the dynamic stop levels. Here's another example. GFAI, all right, we have a strong downward slope. We apply the dynamic stop levels. Once again, this is not a top right here. So this is based on market behavior. Someone could say, well, this is where I place a stop. Well, yes, but this is not. So they're not based simply on tops or on bottoms. You would have entered there at 5.19, place your stop right here. And we see that GFAI didn't really do anything for the next week or so, but ultimately the price soared 16 points. Remember, this was a $5 stock. It went up 16 points higher, or 270% higher in just 2 weeks. And part of this is being able to pick the correct stocks as well. That's also applied and included with the dynamic stop levels. Don't wait another year to become a consistent trader. I know a lot of you are nowhere near where you thought you'd be at the beginning of the year. Take charge of your trading. Remember, as I said in the beginning, the only traders I know who are still trading from my days on the floor of the stock exchange are the ones who take charge of their own trading. They don't wake up every day to go to a chat room to find out what everyone likes. They don't have a system that automatically spits out buy and sell orders for the day. They have a plan, a simple plan like I just shared with you, and they stick to it. And that's what will sustain you. So take charge, learn how to trade with the specialist edge. Okay, so remember, The dynamic stop is a two-part course. You get the full video. These stops are based on market behavior, not just randomly. And once again, if you want to use your own strategy, that's fine. You can apply them to any market, any time frame. We're also going to include, for advanced traders, 3 proprietary trading techniques. But remember, that does require the PET D, which is not included. But what is included is a full year of the PTS Primo charting platform, where you can automatically display these stop levels as they appear. So let's break it down. Normally, the regular price for our dynamic stop course is close to $4,000. We're going to discount that today and bring it down to $29.95. You're going to save $1,000, but this also includes payment plans. So if $29.95 is still too much for you to come up with in one lump sum, don't worry. You can put down a small deposit with one of the trading consultants at ProTrader Strategies, and you can still be up and running. You can just put down a small deposit, establish a payment plan, and you can be up and running as early as today. This is a great way to become initiated, become familiar with our courses and with our methods. And on top of that, we'll be there with you every step of the way. Here's how to take advantage of this great offer. Once again, contact ProTrader Strategies. I developed the dynamic stop levels with them. They're in charge of all the tech support. They're also in charge of establishing a payment plan and any discounts that you may be interested in. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones now. They can answer any question that you may have. And remember, there's absolutely no obligation. If you just want to get a quote for a payment plan, they can do that over the phone. If you have questions about data or about markets, they can give you more information. Now, that link you see at the very bottom is the link that will take you to the info page for the dynamic stop levels. Also, you can sign up online if you'd like. If you'd like to pay online, you can do that as well. Now, that's not a live link, but we've just posted a live link in the webinar chat box. So if you just go to the icons there and click on chat, you'll see a link there, and you can click that on, and it will take you to that info page, okay? Now, I promised you I would answer any questions that you may have. So now's the time. Just simply go to your chat box, or you can go to your question and answer, and I'll answer them to the best of my ability. Someone's asking, what if I have problems learning how to apply this? That's a very common question, and not to worry. Believe me, I would love to visit all of our students. Unfortunately, we have students in over 115 countries and in every state in the United States, and it would be virtually impossible for me to go see everyone and sit next to you for a couple of days. So we've done the next best thing. We've given you my private email address. You can contact me whenever you'd like, and I mean whenever. Weekends, before the market, after the market, in the middle of the night, it's okay. I'll contact you. Usually I contact people within the next 24 hours, oftentimes within the next half hour. So it's the next best thing to having me sit there. So for every time there's a question or you don't understand how to apply a certain technique or method, you can email me, send me a snapshot, and I'll answer it as soon as possible, okay? That's the best way to keep educational correspondence. Let's see, someone saying, what you showed today could also be done in the reverse for breakout trades to the downside with the bracket indicator with your stop loss at the recent pivot high, correct? Yes, I didn't want to show going short because I know the emphasis was mainly on breaking out to the upside. I wanted to really emphasize inexpensive stocks because we've had a number of students lately who like to purchase inexpensive stocks on the breakout. But yes, let's say you're trading an expensive stock. Let's say you're trading something like Tesla or Apple, let's say, and it has a really strong upward move, and you're looking for a short. You could, by all means, use this the opposite way. Once it trades at the rising stop, which is the sell stop, you would use that to go short, and then the stops created, or the high would be your stop to cover if it happened to go back higher. Yeah, sure, you can do the exact same thing. I just didn't want to go into that, but it's a very astute observation from an advanced student of mine. So I want to thank you. That's very good. So there's no difference. We can probably use that in another presentation, but you're more than welcome. Any other questions while you have me here? How long is this discount? The discounts we have usually last no more than 3 to 4 days, because if you've been following me for a while, you know that every week I give a different free presentation, usually the midweek, and that's where we give another promotion on an entirely different strategy, an entirely different technique or method. So the other one is discontinued, and it goes back to its regular price of, I believe it was close to $4,000. So if you're interested at all, please, now's the time. Watch the video. We're going to send out the video to everyone. You can watch it to get a better understanding. And if you really are excited about it after watching the video, contact Pro Trader Strategies. They can set up the payment plan, or they can give you a quote. You'll know exactly how much you have to put down. And believe me, it's very little. You don't have to put down a lot. And they'll establish a payment plan. And as I said, we have a great tech support department. They can have you up and running and with the platform and send you the educational online course that day. So you can be up and running as soon as possible, okay? Any other questions while we have you here? Let me just check this. Well, I guess if we don't have any further questions, that will bring us to the end of the presentation. Remember, this is a great technique. I feel, in my opinion, this is probably one of the most overlooked tools we have at Specialist Trading, not only because of its simplicity, but because the many advantages you have. You can use this just as a regular stop placement, and that by itself is a great advantage. But the extra added thing is that you can now use it for breakout trades. And this is something that we just found out while we were doing the research, and this makes it even more valuable than what we originally thought it was for. So take your trading to the next level, and most especially take charge of your trading, okay? If you're at all interested, contact Pro Trader Strategies, 1-310-598-6677. There's absolutely no obligation, so don't feel intimidated to ask questions, and then you can think about it, okay? But remember, don't sit on it too long, because after 3 or 4 days, then we cast it aside and move on to the next technique. All right. As we close here and take one last look at our disclaimer, thank you so much for taking time out of your Wednesday to watch this educational presentation. I hope you learned something. And most especially, I look forward to all of you becoming students of mine in the Dynamic Stop course. Thank you so much. I'll see you next time. Bye-bye.